into it. So welcome to the fourth installment of Everyday Money Skills, a community series. This is led by Michele Eden Montas. Tonight we'll be covering credit and savings, making money work for you. My name is Lizzie Cunningham. I'm the experience coordinator here at Whirl. This series is designed to reduce financial stress, build confidence, and provide realistic tools that reflect how people actually live and work here in Down East Maine. If you're interested in attending more programs in this series, we still have two left. And so May 4th, we're going to be covering local, state, and federal financial resources. And May 11th, we're going to be covering taxes, retirement, and investing, the basics, because of course that's a big topic. Those programs will also be held on Mondays from 6 to 7:30 on Zoom. So if you have any questions about that, you can always reach out to me by email or phone. A quick little bit of housekeeping before we begin. You're all doing great, but just mute yourselves as we go to minimize any audio distraction. And also, again, since we're like a nice bite-sized group tonight, questions are welcome through the program. So you can raise your hand, you can pop a question in the chat. We welcome questions. It's lovely when it's an interactive kind of a journey together. So with that said, welcome everyone, and welcome Michele Eden Montes. Here's the mic.
Thank you. So it's really good to see folks again. I am joining from my phone so that the internet doesn't have issues. So Lizzie will be sharing the slides and I'll be walking through them. So for those who have been here the last few sessions, the things we've talked about include budgeting, planning for irregular income, and understanding debt. And so today we're going to build on all of that. And we're going to talk about two areas that can really change your day-to-day financial stress level over time. And that's credit and savings. But we're going to go deeper. We're going to talk about how credit cards actually work behind the scenes so that hopefully with a deeper understanding, you are better able to use credit cards to your advantage, why people get stuck in them, how to use them strategically and not just safely, and then how to build savings in a way that actually fits real life, especially when income isn't consistent. So the goal today isn't just understanding, but it's hopefully feeling like you can make clear decisions going forward. And so as Lizzie said, always encourage participation, but if you'd rather just listen and take notes over the course of the program, that is completely fine. Just wanted to check in with Lizzie. Are you able to pull the slides up? Oh, there we go. Sharing screen. Okay.
I was trapped in last week.
Happens. So while those load, I'm going to start with a quick check-in. So we want to go to slide 4. I sent them to you via email if it helps, Lizzie.
Are we here? We're credit cards. What's really going on?
It should be called credit and savings. I shared them yesterday. Would it be
So,
helpful to share them again? I can do that. Here, let me
so
just.
we had our quick
Oh,
check, or we had how tonight will work because we are in credit and savings, I think. And then slide 4 is a quick check-in, and then it's credit cards. What's really going on?
yes.
Or that's slide 5. So I can go anywhere in there.
We could go to slide 4. That'd be perfect.
Okay.
Right now, we're seeing your drive.
Oh, really? Interesting. I feel like every week there is that's why. I see. Every week there's a
Yeah,
fun new technological challenge that we learn together. We move through
always.
them together. Thank you all for your patience once again.
So, I wanted to start today's session with a check in. So, when you think about this question, when you use a credit card or think about using one, what feels most confusing or stressful? If anyone wants to shout out what they're thinking, maybe put it in the chat, or just think about it privately if you'd prefer.
Hi, Michelle. I guess the thing with credit cards I'm always confused by is um they always have these like deals or rewards. And so it's always confusing to me which is the best deal or best reward um when I have a credit card.
Yeah, a great thing to bring up. And that goes to using credit cards strategically and not just safely. And I think the answer depends on what you're looking for. So there are really good credit cards for travel, for instance. And then there are credit cards that are specific to a company like TJ Maxx or Amazon. So I personally use a card that has really good travel rewards because I love to travel, but that's not going to be right for everyone. And so when thinking about credit cards, I think the most important thing is to shop around and to really see what your options are and thus make the best decision for you. But in addition to the rewards, which is the fun part of credit cards, it's really important to understand the fine print and the things that are less glamorous and fun, like the interest rates, what consequences look like if you're not able to meet your payments. So always looking at it in a full financial picture. Um, but I think some common things in terms of stress or confusion might be not knowing the mechanics of how interest works, maybe feeling like you're paying every month, but your balance isn't going down, maybe uncertainty about when to pay, because paying at one point in the month is actually not the same as paying at another point. Or maybe just generally feeling like it's easy to lose control. And so we're going to unpack all of these things today. If we could go to slide 5. And so, how do credit card companies make money? Because ultimately, they are a business. And I think understanding high level what that business model is helps us use them more safely. Um, and so, credit card companies are businesses. Their goal is to make money. And they make money in a few main ways: interest when people carry balances, and that's what we're working on; late fees, and then sometimes annual fees. So I, for example, have a credit card that has an $100 annual fee, and because of that fee, I get great rewards for myself. So the system is actually designed in a way where, the more stretched someone is, the more money the credit card company makes. And that's not to say you shouldn't use credit cards, but it does mean understanding the system gives you more power. And so let's talk about why credit cards can become stressful. And these are things we've touched on in our previous sessions. It can be a combination of things. It can be using a credit card during a tight month, only being able to meet the minimum payment, or interest quietly growing in the background. And then the balance doesn't go down, it grows. And this can be especially common when there are periods of irregular income and catching up or feeling like you're falling behind. So it's not necessarily about discipline, it's also how the system interacts with real life. So let's go to slide 6 and talk about the two really important balances and their differences. So you have your statement balance and you have your current balance. And your statement balance is what you owe for the previous cycle, and your current balance includes new purchases. Why does this matter? Because if you pay your statement balance in full, you usually avoid interest because you are paying everything you owe. But if you only pay part of it or you carry a balance, then interest starts applying. And so that's a small detail that makes a really big difference. Now let's go to the next slide around timing, because when you pay your credit card can actually affect your credit score. So there's something called credit utilization, and that's how much of your limit you're using. And it's usually reported at a specific time each month. And you can see what that time is if you log into your bank account. So if your balance is high at that moment, even if you pay it off the next day, your score can temporarily drop. And so a strategy that some people use is knowing what that date is every month. It's the same number every month, but it will be different for each person based on when you open that card and what your account is. But the strategy is you make the payment before the statement closes because that keeps the reported balance lower. Now, this is not required, but it is a helpful tool if you're trying to build or improve credit. Now let's go to the next slide. Using credit during emergencies. So I want to talk about something realistic. Some people are using credit cards not because they want to for unnecessary purchases, but because they have to for things like a car repair or a roof repair. So the question becomes, how do you use credit in a way that doesn't create a long-term problem? So a few key principles to always keep in mind is one, as much as you can, use credit cards for necessary expenses, and then have a rough plan for how it will be paid down. And that goes back to our work on budgeting and just being really informed around the cash coming in and thus the cash coming out. And then finally, avoid stacking multiple cards if possible, because then we get into that cycle of debt where debt grows on itself. So credit can be a bridge, but you do want to avoid it becoming a longer term weight. So let's go to slide 9 and talk about a sector of the economy, buy now, pay later. And so you might know of companies like Klarna and Afterpay. They're often marketed as no interest or easy payments. And the way they're marketed, it can make it feel like they're safer than credit cards. But in many ways, they're very similar to credit cards because it's still debt. It's easy to stack multiple purchases. Missing a payment can lead to fees. And it doesn't always help build credit. So in some ways, it's even worse than credit cards. So it is something to be aware of. It can be a tool in certain instances. I know, an example, Home Depot might allow you to make a large purchase and then have no interest on it. That can be an example where maybe it makes sense because you're having, large reparations on your home. But it is something to be aware of in terms of the fine print and what it means in terms of any potential consequences you could be signing yourself up for. So just be very careful around these because they're still debt. So let's go to slide 10. Now, why saving feels so hard? Because income is tight or unpredictable. Essential costs are really high, especially as inflation increases. And then when something goes wrong, savings get used immediately because they are the first line of defense. And so the goal here is not to just save more in a vague way. It's to think about how to build small amounts that actually stay there. And so if we go to slide 11, I think a helpful tool for this in particular and with irregular income is something called a sinking fund. And it's just a categorization. So it's a small savings bucket for a specific purpose. For example, a car repair, heating costs in winter, holidays, school expenses. And so instead of being surprised by these, you slowly set aside small amounts over time. And so going back to what we were talking about with budgeting, it turns emergencies into planned expenses. And so it might be something that happens once unplanned or happens once planned, but it's not, top of mind each month. Holidays come around once a year, but just building that into your financial mental framework. Now let's go to slide 12.
I've got a question about
Yeah.
these sort of small savings, and I think it's maybe kind of harkens back to some of our questions as we were looking at budgeting. You know, when I have my bank account and have a savings account, is it something that you would recommend to have kind of multiple savings accounts within there, you know, to have like this sinking fund saving account that is, I'm always wondering how many accounts should I have in there?
Yeah, it's a great question. And I don't think there's one answer or one number. For some people, it might really help to have structure around it where, X amount of money is set aside for the car repair, and thus I am not allowed to touch it.
Mm.
And that's a helpful mental framework if otherwise you might touch it. At the same time, having 10 bank accounts is probably too many, just in organization and keeping track of everything. So you don't want it to go overboard. And you also want to know yourself. Like I, for instance, save for retirement, and to me, that feels untouchable because it's in a separate account. And also, there are penalties for taking money out. But I think the example holds in terms of it just being separate. And so, if there are large expenses that you feel you need to save for and otherwise might touch that money, a sinking fund might make sense. But if it's for a small purchase that you feel you would otherwise be able to save for comfortably within your broader general savings account, and it creates more organizational hassle for you, I don't think that's necessary at all.
Mhm. Great.
And there are also different kinds of savings accounts, which we're going to get into. But, there are your checking accounts, your quote unquote everyday account. Then there are also high yield savings accounts. And we'll go much deeper into those later. But those to me feel like longer term savings accounts because there are transaction limits. You can't withdraw from it every day. And so that can be a nice way to park money for a specific thing. And you also make a nice 3 to 4% return in a high yield savings account, unlike a checking account.
Awesome.
Okay, so this gets us into what I was just saying around savings tiers. And so I think of savings obviously as having different purposes in terms of I'm using things for different purchases and then different long term goals. But as a result, I actually put the money in different places. And so you have your checking account for daily use, a buffer, and that buffer will depend on your lifestyle and what kinds of bills you are paying. But I think, a couple $100 for the daily basis is a nice place to start. And then a high yield savings account, which is longer term. And for savings, you would be touching at most a couple times a month. And so that separation makes it easier to protect your savings. And on the next slide, I'm going to dive deeper into what exactly a high yield savings account is and what I think some good ones are. And I think this is one of the most practical tools we'll talk about in the entire series because it helps with budgeting. It helps your money work for you because you're actually making money in this account. And it's risk free in the sense that it is backed by the FDIC up to $250,000 per account, but keep that number in mind. And so a high yield savings account, often called an HYSA, is simply a savings account that pays a higher interest rate than a traditional bank account. Now, why does it pay a higher rate and how? And that goes back to understanding the business model, which I think is really important. So, a lot of these accounts are offered by online banks rather than banks with physical branches. So, an example would be American Express. Of course, they have, a physical headquarters, and you might see Amex things in the world, but you're not usually going to the Amex branch for your daily checking. And as a result, they have oftentimes lower overhead and thus can have more money in your account in the form of a 3 to 4% return typically in line with the federal interest rate. Importantly, they are still very safe. And so as long as they are FDIC insured, always look for that. Your money is protected up to $250,000, just like at a regular bank like Chase. Now, a question people might have is, well, if these accounts pay more, why doesn't everyone use them? And so the main reason they can offer higher interest is because they operate differently. By not having those physical branches, they don't have as many staff. And so you could say that's a great thing. That's more money in my pocket. But on the flip side, it also means it might be a lower touch model for you. And if you're someone who really enjoys going to the bank and speaking to someone in person, know that preference and see, would I rather bank online? Would I rather bank in person? And just do what feels most comfortable for you. So let's go to the next slide. So how interest works. When you put money in one of these accounts, the bank pays you interest. And so you'll usually see something called an APY, or an annual percentage yield. And that is the total interest that you would earn over a year, including compounding. What is compounding? It just means you earn interest on your money, and then you earn interest on your interest. And so it's like your profit is continuing to make money. It is a slow process, but it works in your favor over time. And so let's illustrate this with real numbers. If you put $1,000 in a traditional savings account at Chase, for instance, that earns about 0.01%. Essentially nothing. And after a year, you'd earn 10 cents. Now take that same $1,000, put it into a high yield savings account, earning around 4%. After a year, you'd earn about $40. Now, that's not meaningful income, but you would have made money for essentially doing nothing, for just putting your money in a different place. And I think where it really becomes powerful in terms of making real money is when you look at the longer term. So let's go to the next slide. And we'll talk about a graph I put together that illustrates the power of compounding, which Warren Buffett said was a wonder of the world. So let's talk about some of the numbers here. So in year 0, I'm starting with $500. And every year I'm adding $300. So $25 a month. So year 1, it's mostly your contributions. Year 2, it's your contributions and a little bit of interest. The interest is in that yellow-orange color. But now look over time how the bars change in terms of size. And you see the orange get bigger and bigger. And so after 20 years, you have put aside $6,000 and you've put aside that $25 a month, same amount, but you've made nearly $4,000 in interest. And it's steady, it's safe, and importantly, it builds over time. So you're not just making money from what you contributed, but you are also making money from the profit you made in the past. And that's the power of compounding and why you see that start to really slope up at the end. And as time goes on, you reap more and more of those benefits. And if I could impart any investing concept on you in this whole 6-part series, it would be the power of compound interest. Now let's talk about something important that often gets left out with high yield savings accounts. As I was alluding to before, they are not designed for everyday use, and that's important to keep in mind if you're thinking about opening one. There are a few limitations. So first, transfers are not instant. They're also not instant usually in regular checking accounts, but if you need money, it might take 1 to 3 days to move it back to your checking account. Second, Many of these accounts limit how often you can move money out. And so historically, there was a federal rule that limited certain types of withdrawals to about 6 per month. That's not nothing, but it's not every day. Now, some banks have relaxed this, but many still keep similar limits. So if you're thinking about opening one, make sure you know what that number is for your account and that you're not putting money in there that then you need more frequently than, say, 6 times a month. So, what does this mean in practice? This is not an account you can use to pay bills or swipe regularly. It's better for things like emergency savings, planned expenses, or money you intentionally want to keep a little bit out of reach. And that small barrier is part of what makes it effective. All right, let's go to the next slide. So, practically, where can I open one? So, there are a lot of options. Online banks tend to offer the highest interest rates, but again, always make sure it's FDIC insured. Some examples of high quality, high yield savings accounts include American Express, Goldman Sachs, Capital One. And these are popular because they don't charge monthly fees, so it is free to open an account. I find them quite easy to use in terms of user interface, and they tend to have competitive rates. And then you can also look at local banks or credit unions. They may offer slightly lower rates, but some people might prefer them because you might be able to talk to someone in person, or you might prefer to keep everything local. So, again, whatever suits your preference and the way you like to live your life. So, there's no one right answer, it's about what works for you. So, I'd love to open it up to discussion here. If anyone is open to sharing, does this feel like something you would consider using? Why or why?
Michelle, what were the three you said? Capital One, Goldman Sachs, and what was the other one?
Express?
What was it?
American Express.
No, I guess, okay, thank you. I have one my son set up for me. It's in I have an IRA, and then he set one of these high yield savings accounts up for me that were not to touch. When I was working, I put money into it, and then he also put money into it. So very nicely. Um, yes, and I'm trying to think what bank it's with, and I can't remember because it's under his name, but
Oh, that's okay.
it's my money. So it's just mainly for emergency. We're saving, and I'm trying, and I'm not touching it, and trying not to take money out of my IRA either. So, yeah.
Have you found it useful, neutral? What do you think about it?
Yeah, it's just to be for emergencies, so we're not touching it. We're just it's accruing interest and we're just letting it sit there for now. So, yeah. It's retired. Well, I'm actually looking for a part-time job, but it's supposed to be retired. And I- yeah, it's nice to know it's there in case of a health emergency or, say a car emergency or whatever. I rent an apartment, so I don't have a house anymore. So, yeah, it's nice to know that it's there. Yeah, in addition to my IRA, which I'm really not touching either. So, but for daily expenses and extra play money, I really am looking for some kind of a part-time job, online job. Is there anyone that has any experience with the online job? I know this is off topic, so maybe we could talk privately about that, but I really would like to get an online job, but I have no idea where to start. I've never, I've been a nurse, so it's always been hands-on kind of a job. So anyway, that's it. Sorry.
Donna, why don't you shoot me an email? I mean, the first thing that comes to mind is Sunrise County Economic Council. They would
Okay.
love to have a conversation with you about
Oh,
some.
great.
But so yeah, send me an email and we can talk about it.
Thank you so much. Thank you. Thank you. Okay, both of you. Thank you. All right.
I'll say, Michelle, that this is great. I have been wanting to open up a high yield savings account and like have it on my running list of things that I should be doing, but I'm not doing. And so I think it's gonna happen. I think it's gonna, I feel like tonight was like the final push of like, get it.
I see Darla put in the chat that she uses Amex and that it has been a good experience. I personally use Amex. My sister has one with Goldman Sachs. I think they're all high quality options because, again, no fee to have the account, quite a good rate, and pretty easy user experience.
Can I ask, is that something you can just do for Amex, like you can do it online, or do you have to have some sort of, because I have like an Amex business card, but is that something separate?
So I actually have everything under one Amex account. So when I flip through the website, I can see actually a personal credit card, a corporate credit card, and then my high yield savings account. So I imagine you are able to attach it.
Okay, cool.
And then the interest is deposited monthly. One thing to keep in mind, you do have to pay taxes on that interest. Sad. But so when you think about it being 4%, in my mind, it's a little bit more like 3% when you take off the taxes.
That's a good reminder.
So just, keep it in mind if you're planning towards taxes because that could be owed on the back end. Any questions about anything I shared? In particular, compound interest, because I think that's a really important concept and not necessarily all that intuitive if it's new to you. So if anyone has any questions about that or is curious about hearing more, or if you're like, yeah, I get it, we can move on.
I have a question. Just wanted to know. Right now, we just moved to Maine, and we have a lot of accounts in both personal and business where we moved from a different state. So we're trying to move here, and we're trying to figure out whether like compounding, like we want to do that and put money into a compounding interest account. And you were mentioning credit unions versus other banks. Like, what are your thoughts on where that would be a better fit?
I personally would go towards the larger banks. I can tell you why that's my preference, but I also see the argument for going more local. My preference for larger banks is typically the rates are higher than credit unions. I like sort of the power of a large bank. You can very much argue against why large banks are bad, but in terms of feeling like my money is safe and taken care of, I personally get confidence from large banks in that regard, not all regards. And I personally do everything online. And so having a credit union, down the street is not so important to me. But someone who wants to be talking to a person and have a more personal relationship, that may change things.
Yeah. Thank you.
Michelle, sorry, I turned my video on. I thought your explanation of compounding interest was great. And I also always have a tough time explaining, I have teenage kids, explaining that to them. I'm like, I know it's important and I can't explain why. But I was just wondering, did you create that chart or was that something that you pulled off the internet?
I created it, but there are a lot of charts on the internet.
Okay.
We will slides if you want to show that exact graph to your kid.
I would love to show that exact one because it was simple enough that I was like, okay, now I can explain to them. So yeah, I would love that if that would be great. Thank you so much.
I also think a fun sort of quote unquote game is to play with a future value calculator, and that's something you can do with your kids. I personally love doing it in terms of modeling my retirement, but it really shows the power of compounding where just literally type in future value calculator on Google. And it'll be this setup where you'll put in a couple inputs, your time period in years, You'll put in your expected returns. So maybe put 4% if it's a high yield savings account. If it's the stock market, maybe 6 or 7,
Hmm.
balanced. Then you put in your starting amount. So I would say I have $500, and then you put in the amount of money you are paying in each year. And then you, especially if you put in large numbers in terms of time period, if you're talking about your kids who are young, they have a lot of time, it's really powerful. And so they can play around
And
with numbers and it might bring it to life for them.
yeah, and does that break down? Like, I just thought your graph was great because it showed how much compounding interest made a difference in the end. Would a future value calculator probably do that same thing?
It
Okay,
does.
great.
I'm,
Awesome.
I'm
Thank
gonna
you.
pull up my favorite future value calculator.
Oh, great.
They're similar, but this one is cool because it shows exactly that. And
Great. Oh,
I'm just typing it in and I'll put it in the chat.
great.
And it's fun because you can also simulate, oh, if I save this amount versus that amount, or if I
Yeah.
save for 2 extra years, what's the difference?
Yeah, that's actually really helpful. I feel like you should do this course for, obviously you're doing it for World, but I just want to put a plug in for like the local high schools too, just to let you know.
Did
Thank
it
you
for
so much.
16-year-olds in Washington County. It was a lot of fun.
That's great.
That's right. You worked with the Journey program.
Yeah.
Oh, cool.
Okay, there it is in the chat. And it also can be helpful in terms of thinking about where you want to put money. We'll get into investing in our final session. And of course, with higher return usually comes higher risk, and you always need to keep that in mind. But if I think to myself, if I put this money in the stock market versus bonds versus a savings account, what does that look like in 20 years? So it helps me make investing decisions too.
Mm. I really appreciate the conversation about compound interest. I mean, I think that the what I've kind of absorbed about interest is mostly in like the credit card sphere of it being like bad and something to avoid. And so I think it's really interesting to and useful to have a conversation about ways that it can work for you. And I wonder, especially for Sasha's question about her kids, like, are there other spaces that we should be exploring financially that also are, are higher interest space? Is it like just the high yield savings account, or are there other things to kind of consider?
That's a great question and topic you're bringing up. And two things you're bringing up. One, the fact that we might think about interest in the space of credit cards and interest building in a bad way. But it's
Mm,
that exact framework that we're talking about in terms of compound interest where we're making money. And so if we understand that framework, we understand the negative side and we understand the positive side and how to make it work for us. So that's one thing. And then second, besides high yield savings accounts, how else can we have compound interest work in our favor? There are a lot of ways. We will go deeper into it in our final session on investing, but I think saving for retirement is the ultimate example of compound interest and just saving money over a long period of time. And that sometimes it's a lot less about the amount you save and the fact that you save over a period of time. So you allow compound interest to actually occur. But it's not just retirement, it's also if you have access to a health savings account through your employer, that's another way where you can put money aside, and it actually has a lot of tax benefits because you put it aside tax free, it grows tax free, and then you take it out for health expenses and again don't pay taxes. But it's the same exact principle where you are, in theory, investing that money in whatever you choose, whether that be stocks or bonds or nothing, but then you don't benefit from compound interest. And then seeing that money grow over time. And so it's sort of in every facet of finances when you think about credit and interest in the bad way and then interest in the great way. But retirement is the biggest example.
awesome. Great. Thank you. Any other questions or thoughts from participants? Great.
Okay, well then I can finish with my final slide, which is slide 18. Our wrap up in terms of actionable steps. I feel like at the end of each session, it's helpful to feel like, okay, I'm going to leave this class and I'm going to do something this week, because oftentimes, you have something on your to-do list, but then life gets in the way. And my hope for this group is that it creates some structure around it and some accountability, since we're in a group. And so if you'd indulge me, I'd like you to pick one thing, or multiple if you'd like, but one thing that we talked about in our class that you will do this week. And so some examples would be setting up autopay. There are different forms of autopay on your credit card, and of course you would have to choose the one that works for you. I think a really nice one is setting up autopay on the minimum payment, because that's usually an amount of money that you will reliably have in your checking account, and then it helps avoid you accruing interest over time. And that's really as a, oops, I forgot to pay my credit card, life is busy, I have this backstop plan B. Another one is opening or separating a savings account. That could be opening a high yield savings account, or maybe a sinking fund if you feel you want to put a certain amount of money aside for a specific important thing in your life. Checking your credit report. We talked about credit scores last week. And again, a lot of this class comes back to knowledge and being armed with your financial picture. And so knowing what your credit score is, and we've talked about ways to improve it over time, knowing your credit utilization, hopefully paying your balance in full, so that if your credit score is somewhere that you would like to improve upon, you can take steps to get there. And then maybe making a small extra payment, as we've been talking about, not just saving, but saving for surprises, because surprises are always going to come into our lives. And so the goal is not to do everything, but to start something. And I think oftentimes when you start something, you end up, taking subsequent steps. So that is the end of the planned presentation. I'm happy to stay on and take any questions or discussion, but I'm also happy to give time back.
I think I missed the meeting you had with, if you're not making income in a more kind of like traditional way, like I work for myself. So again, like I'm sure you had that discussion, but if you're making money more one month, less another month, maybe a couple months, it's like so imbalanced. It's hard to do that kind of like savings and planning for the future. So, that's I mean, I'm sure there's a lot of people who do. What are your kind of like tricks or
Yeah,
to like help
it's
out with that?
really hard. And it's something we spent almost a whole class on because it is so challenging. And so we can certainly send you the slides on it and the video from that class. But I think some top of mind strategies is, if income is irregular, think about paying yourself a paycheck so that you're smoothing out your income. And so I always try to think about things on an annual basis instead of a month, so that you have a month where you make a lot of money and you might think a certain way about your financial picture, and then the next month is different.
Right.
Obviously, you're not necessarily going to be able to know in advance which month is higher, which one is lower. Maybe you do if it's something, say, tourism based, but thinking on an annual basis and then dividing by 12 so that you have a smoother month by month picture. And then again, you're paying yourself a paycheck so that you don't, quote unquote, overspend in your high month and then you're feeling anxious in the lower month. So that's one strategy. I think Having a very clear budget is another one. And again, a budget on an annual basis, and then you can divide it by 12 so that you have a more monthly view. But thinking about things on an aggregate basis to me is the most important.
Do you have any online like budget, a site that talks about building an annual budget like that
I
that you
can look at sites. We did circulate two budget tools. One that I found online, which is Excel provides all these different budget templates so that you could pick the best one for you. And then I also created a budget template where you could fill in
that
what
would be
your budget.
yeah.
And that one tries to take it from the aggregate view and then, pare it down to divided by 12.
I can send that to you, Basha.
That would be great because my creative brain doesn't build well like that.
Nice brain, good for some.
Mhm.
Yeah, but it's really challenging. And again, I think a lot of it comes back to knowledge and planning. And it's not necessarily fun, but it's really powerful.
Well, I have another question. I don't want to take
Oh,
everybody's time, but in terms of, I'm intrigued why this isn't part of schooling, like elementary school education and high school education. And I mean, this is something that every one of us has to deal with, but it isn't really introduced on this. I mean, it should be taught like math and sciences, and why isn't it a full education course from kindergarten to high school?
yeah, it's crazy. And it's part of the reason I wanted to do this class because there's women for healthy rural living and healthy in many senses of the word, but there wasn't necessarily a view of financial health. And obviously that affects every single person. And oftentimes women have two things, potentially less confidence around it. And two, oftentimes the men in women's lives take the primary role in terms of finances. And I just don't think that's okay. I think we need to know what our financial picture is in terms of money coming in, money going out, where our name is. Because if your name is on the mortgage and the mortgage isn't paid, your credit score is affected. And so, of course, this can be done in partnership with family members, but I think women need to know these things. And so I'm really excited about the course. But it is crazy that it's not taught because it's affecting everyone, and it can be relatively complex because there are so many topics to cover.
Yeah, that's what I'm saying. It's not just one course like, fill out how to fill out a check or something like that. It's just like any other math course or anything like that. I think you have to have a few years of it to really grasp what it is.
And
So thank you for sharing the limited amount here. It was helpful.
Yeah, and compound interest to me is one of the most powerful financial tools, and it's not something that most people are sat down and told about. So trying to spread the gospel.
All right, thank you.
Great. Thank you all so much. I do love these smaller groups because we can have a little bit more conversation. I think it's really awesome. So thank you all for coming out and spending another evening. And we have our next class is just a week from today. I was thinking that there was another week in between, but oh my goodness, May is coming at us. So I hope to see you all there. And if there are to Basha's questions, if there are questions that you have about previous parts of the series or previous, details or information shared, resources shared, you can always email me or give me a call, and I can resend, reshare anything that we have covered. Last week I struggled with the recording, so that may be available sometime, but we'll see. It also may not, but certainly the slides are available for that. So yeah, thanks again, everyone. Any final question before we wrap it up for the evening? Wonderful.
Okay, thank you all for coming, and hopefully see you next week.
Thank you.
Thank you.
Have a
Thank you
good night.
very much. Thank you.
Bye.